Yo, what is up, guys? It is day 6 of this framework bootcamp, and today we are going to be getting into some fair value gaps and some breakaway gaps. We're going to be taking it easy today, keeping it simple, keeping it just baseline. I actually didn't trade today. I wasn't even on the charts. It is Thursday the 16th today. Um, yeah, so basically, I just haven't been feeling good like the last 24 hours. I decided it was probably best if I just caught up on some sleep. So that's exactly what I did. Um, so yeah, without further ado, let's get straight into this. Um, go like so. Um, how the fuck did you guys trade today? I wonder. I know one of my students took a loss today, um, but he's handling that loss how he should. Um, so yeah, fair value gaps are a three candlestick pattern. So they essentially, the second candlestick in the pattern is an expansion candle, and that creates an imbalance of market orders and its price range that lacks orders in the opposite direction of the market sentiment, essentially. It's beneficial. You can use it as like a retracement tool. You can use it as something to essentially bounce off of or get disrespected. You know, so if price revisits that range and we see buying slash selling power out of that range with the same amount of displacement, we can expect to play a continuation model out of that fair value gap. Let me check to see if I have the definition of displacement on here. I probably should. Here we go. All right. So displacement is a strong aggressive move in price that shows a clear imbalance between buyers and sellers, right? So jot that one down. I'll give you guys a couple seconds. Um, Obviously, you guys should be taking notes on most of this. Unless, if you guys don't want to take notes, I guess you guys can, you know, DM me on Instagram and ask me to send you the blueprint with all the slides in it. Um, but obviously, it's all made to tailor my teaching style. I made this slide myself and everything in it. So obviously, it's beneficial for me to explain my thought process behind everything in these slides. You feel me? So, yeah, you guys get displacement now. Um, it's basically just seeing very strong movement in one direction. So, to continue the more definitions and stuff on this, this concept can be used on the higher time frames to help determine bias. So like a 4 hour, a 1 hour, a 30-minute, or a 15-minute gap, you can take a play in between those gaps. You can see which gaps are getting respected and disrespected, and that'll essentially help you determine market sentiment, right? So price moves in a couple different ways, right? Price either wants to generate new liquidity, sweep liquidity, make an imbalance, fill an imbalance, or finally consolidate. And I mostly use this concept on the 4 hour, 1 hour, 5 minute, 1 minute, 15 minute, you know. Um, and so now we'll just go into marking some of these out, right? I will clear my screen, and we only need one chart here. So fair value gaps is like the easiest confluence in my opinion because it's literally just a three candlestick pattern, right? I'll do a little drawing up here for you guys. I'll go to the brush, right? Alright, So essentially, you see this first candle, right? We're obviously in bull structure here, going up. The first candle, you essentially take the top of this wick and the bottom of the third candle's wick, and you would essentially just mark out that as a box. You take your rectangle sign and mark it out just like so, right? So this gap here is showing an imbalance in sell orders, correct? So there's an influx of buy orders within here. So you can expect price to either come back and tap into this gap and then continue trading up and out, right? So you'd look for your entry somewhere over here, right? And then place your stop loss either below the gap or 50% of the gap. Depends on really how much you're willing to risk on that certain trade. Obviously, you should be risking somewhat of the same amount every trade. Um, but yeah, you guys get this, right? You just essentially look for longs out of this bullish gap, right? We would call this a bullish gap because bullish is going up and bearish is going down. Correct? Correct. So we will mark those out quick, or we'll mark out a couple of examples here. So if they're not super obvious, I wouldn't mark them out personally, right guys? So if you guys can't see, or I guess if you guys in 6 months can't see a fair value gap, don't worry about marking it out. But here's a fair value gap. Obviously, um, didn't we close below it, but we didn't fully have. We just needed to sweep this liquidity and probably, oh, we didn't even fill this imbalance. So yeah. So 3 candlestick pattern, right guys? Make this long. So, ready? This is for a bearish fair value gap. Here's 1 candle, 2 candle, 3 candle, right? So for the bearish gap, you take the bottom wick of the first candle and the top wick of the third candle and mark that out, okay? So yeah, obviously in a range like this, it's hard to play off these fair value gaps, you know, because they're not really biased in a one certain direction, you know, because in theory this 1 hour gap should get respected and price should potentially continue lower. You know, this is a very large expansion move. We could or should potentially go down to this low. But that was like middle of the week. We were kind of just trending up for this gap down for this week. So yeah, guys, you can use them. They're on the 4 hour time frame. Here's one. They're super easy to mark out. You know, you obviously don't want to drag it out that long. So you see in this one, this is actually a good example, right? So we tap into the CE of this gap, which is this 50%, and then continue just fucking absolute dump work, right? Drake fucking CalVG candle all the way down to Timbuktu for God's sake, you know? You can go on the 15-minute time frame. Here, I'll delete all of my drawings for y'all. 15-minute time frame, right? As you can see, we had somewhat of a reaction off of this 15-minute gap below, right? So gaps can stack as well. So we essentially fully filled this gap, this unmitigated 15-minute gap, and went higher and took out these internal draws on liquidity right there. So you guys get the gist of this, right? This one's a fucking. This is like simple as can be. I will just I mean do that. I'll just so you guys take notes on this, right? If you guys take notes like you should, things will engrave into your mind better. You'll learn them faster and you'll learn them much easier, right? So that's what I would recommend you guys to do, honestly, is write everything that I say down because a lot of this stuff actually has benefit, you know. So then that leads us into the breakaway gap. Um, so the breakaway gap is a fair value gap. Um, they're essentially momentum imbalances that form during strong directional moves. Um, so essentially, with a breakaway gap, you can notice that the third candle closes below everything, even including the wick of the second candle, right? So this one would be considered a breakaway gap because this is the first candle, second candle, third candle. So the third candle closes above the second candle's wick and body. So you can expect that you don't even need to see a retracement into this gap essentially. So you can look for longs. And obviously we get this inverse. You can go to the smaller time frames on um, and then essentially look for your entry point from there. So you don't a breakaway gap, you can notice that the third candle must close beyond the wick of the second candle to be considered valid. If this doesn't happen, treat it like a normal fair value gap. If a breakaway gap occurs, price will most likely not revisit this gap and pump or dump without you. So you just have to be able to notice this. Um, Sometimes don't get FOMO. If you're too late, you're probably not going to get a retracement to that draw on liquidity that you're looking for. Um, so yeah, guys, this is essentially the Fair Value Gap Masterclass. Essentially, all I want you guys to do today is just take 10 to 15 to 20 minutes and just identify these on the charts. You know, um, go back to this week, do a market recap, um, see what fair value gaps got respected this week, see which ones didn't. Look at where liquidity lies and kind of just recap everything that you've learned this week. Keep it fresh, keep it calm, cool, and collected, and move into Friday looking to protect capital, manage risk, and not blow up the rest of the week and go into the weekend with momentum. Alright, guys? That'll be it for today. Um, I think I'm gonna learn a new song on guitar today. I got picks in today. I also ordered a choke and tuner. So yeah, guys, that'll be fun. I don't know what song I'm gonna learn. Probably "Rises the Moon" by Leona Flores or something. But yeah, guys, that will be all for today. I hope you guys have a fucking wonderful day. Jesus loves y'all. Peace.